Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And today, investment scams. I'm talking gold. I'm talking crypto. I'm talking developer funds. Come for me. I don't care. They're scams.
Okay, Mike's trying to trigger you. So like
I'm not.
just everybody, let's take a deep breath. I would call this other investments today's episode that we need to be aware of. So you see, we're doing a good cop, bad cop thing here. Mike, let's start with gold.
Yeah.
What do you think of gold?
I think it's worthless, to be honest.
I mean, you can trade it for money, so it's not
Well,
worth it.
to be honest, the only money is just a story that everybody believes, right? In fact, it's the only story in the world that everyone believes. Money is intrinsically worthless. Most of it's not even physical. And to be honest, it's just digits on a screen being passed around. But you believe the story that if I give you this money, you'll be able to spend it on something else.
Feels like a Matrix episode.
Now, some people believe the same thing about gold, but to be honest, it's intrinsically valueless. Yeah, there's some like practical application in terms of like making jewelry, and I guess it conducts electricity okay. But to be honest, it is worthless. It's not even like it's like particularly rare in the grand scheme of things.
Yeah, I don't know what's up with you this morning.
It's bollocks.
Yeah, look, I mean, the other thing to think about, I would call gold an alternative asset, where maybe it's part of
alternatively crap.
part of a diversified portfolio.
Diversifiably crap.
Because just look what I got to work with today. Over the past 20 years, gold values have kind of essentially gone like a U-shape. So they've plummeted and then slowly recovered over about 20 years.
Exciting time for you losers invested in gold.
Over the past 5 years, I think it's on something around 5% per annum. But it is very much like I think about gold almost as like a zombie apocalypse type.
But I don't even think it's a zombie apocalypse thing. I've seen this
bash
before.
the zombie with the gold brick.
Man, people who invest in gold aren't strong enough to lift the gold brick. And they haven't even seen their gold brick. That's the thing. They're like, oh no, it's an electronic exchange. My gold is vaulted somewhere in Switzerland.
Yeah.
And I'm like, son, let me talk to you about the vaulting fees for your gold in Switzerland. Yeah. They are astronomical, mate.
Yeah. So I don't think gold should be in most people's portfolio because I feel like other assets are far better places with much more predictable outcomes to invest in over the long term. They're definitely like the skeptical person who believes in conspiracy theories.
Well, it's two sides, right? And so for people who maybe have 7 houses and a couple of businesses and a yacht somewhere and these sorts of things, and they want to buy some gold as a store of value for them, like, okay, I kind of get that. For the person who's like, no, I'm not going to invest in anything else because the world's going to fall over. I'm going to buy some gold coins and a bit of bullion here, and that's like my store of value and my assets for my investments. I just think it's absolutely crap.
Yeah. Can we talk about some of like the tricks with gold in terms of the fees?
Yeah. So if you're buying gold online or on some type of gold exchange, maybe GoldX or something like that, really what you've got to consider there is the storage fees or the vaulting fees for your gold. And any transaction costs on the gold as well. You can buy gold at different prices from different places around the world, but each one of those different, I guess, vaults or storage facilities will have a vaulting or a storage fee attached to them. You really need to watch out for that because they can be like they can eat away at the investment, especially if you're only buying like $50 worth of gold or something. Yeah.
And there's fake gold?
Yeah. So if you're buying physical gold, what you've got to watch out for is, not fool's gold, but, bars that have lead in them. You've got to watch out for shaved coins, anything where you're not actually getting the exact amount that you are paying for, especially because minute differences in gold can add up over time, right? So you just need to make sure that if you are buying physical gold and you're going to hold that gold, that what you're buying is the right weight and purity.
All right, I'm scared about this. Let's move on to crypto. Hit me, Mike.
Crypto's a scam. Convince me otherwise. There you go.
So, crypto was, and we felt it as well, right? We had these crypto NFT bros who were taking us out for lunches.
Yeah.
And anyway, I haven't seen one for 18 months with a credit card or an FPOS card.
Yeah.
Crypto is definitely, people are feeling the pain at the moment. There are people who are still very adamant for its functionality long term. I guess one of the big things, Mike, is the lack of regulation and compliance has meant every scam in the book over the past 200 years has been applied to crypto, and unfortunately, it's resulted in some people being caught with their pants down.
Yeah, and we are not doubting the returns that some people have got off crypto, but my real concern there is the lack of regulation around this, and a lack of regulation often creates opportunity as there's new innovative products or coins or whatever. But for me, if it looks like a security, is traded like a security, smells like a security, but just has some tax advantages at the start of it because of the lack of regulation, it is just another security that has been exchanged.
Yeah. So Squid Games, this is interesting. The Squid Games TV show, there was a squid coin?
Yeah, so this was just a pump and dump. And a really famous one was Squid Coin. There was some game that you would play where you get some coins and people were buying them for to trade and for the value. What happened though is one day they absolutely pumped this for a really short amount of time, built up the hype, everything, and then they just stopped trading, and within a couple of days the value went to zero. Scammers made about $3 million from this. Now, you might be listening to this and going, man, people lost $3 million. Damn, that's a lot of money. Well. Do I have some scams for you? Because I have honestly, the amount of scams in this industry and the way that they prey on people, I find really disgusting. Because it's a lot of people losing everything, right? Not just $3 million spread across a couple 100,000 people. If you think about OneCoin, and there's a great documentary or podcast from the BBC on this. So this was an entirely fake crypto coin that scammed about $4 billion out of people globally.
So the coin didn't exist.
It didn't exist.
Do any of the coins exist?
Let's not get into that sort of thing. There was no blockchain. It was an Excel spreadsheet of people who had purchased the coins. It was based out of Bulgaria, and the founder, Ruja Ignatova, I think her name is, has completely disappeared off the face of the earth. They think she's living somewhere in Dubai under an assumed identity. And it was like this. They started in Europe, it went global, and then as it was starting to be found out around the world, they shifted their market or their focus into developing markets, the likes of India, Asia, where people were a bit more desperate and hadn't heard of it, and started taking everything they had from these guys. And it, honestly, listen to the podcast. It's very good.
Yeah. And if you're still kind of not sure about crypto, let me run you through some bullet points. Axie Infinity hacked.
This is just last year.
Yeah, hacked and lost $625 million. Terra Luna lost upwards of $60 billion. Three Arrows Capital lost $560 million and is now in liquidation. Voyager Digital, somewhere between $1 billion and $10 billion lost. Celsius Network lost $1.2 billion. FTX, which is probably one of the biggest ones where there was a huge amount of money, they got hacked for $600 million and then went bankrupt, and customers lost $8 billion. And there was some very dodgy stuff happening there in terms of companies, people investing money into a platform that was then getting invested into a sister company where there was trading. Then there was another crypto company that was potentially involved.
Loans.
Yeah. And BlockFi up to 500 million plus.
Yeah. So I tried to add, this is just crypto coins or exchanges or companies that collapsed in 2022. I could not add this up. I physically didn't know how to do it. The calculator just
I remember you saying that.
I was like, I don't know how to do this. So when we look at
shit ton, that's a technical.
Yeah, exactly. And I was like, oh, it's a shit time as well, because this is real money that people are losing, right? And it's not just some bro in his mum's basement losing 10 grand. These are people losing their life savings.
Yeah. So if you are very savvy at crypto and you think it's the future, I'm not telling you not to do it. But if you are the person who has a friend who says you should really do this and you don't understand it, just stay away from it.
100%.
Now, one I can get behind you is the developer fund.
This is the one that I actually don't think is that much of a scam. Yeah. I know you have an opinion on this.
So talking about developer funds.
Right? Cool. So developer funds are where a property developer gets large enough and has enough projects on the go where they don't seek external funding for their developments. They get their own fund. So people to invest in a development fund, they're not debt funding it essentially. And they will then use that money to fund their own developments. Now, what does that mean for the developer and their developments? Well, usually the cost of capital is probably a little bit cheaper sometimes. And also, it means they don't have to hit or meet the conditions or the requirements for that external funders might place on them, like pre-sales, like the time it takes to complete the development, and those make inherently the developments more risky for the people buying into them. Because if you're funding my development and I say, it's 10 houses, and you go, cool, that's great, Mike, you have to sell 8 of them before we even break ground, otherwise you're not getting any money. Cool. I go out and sell 8 of them. All of a sudden, the funding loan is paid back, and there's a bit of probably fat in there for the developer already, and I've only got to sell 2. It makes it a lot less risky in terms of, I guess, the amount of pre-sales or sales that they have to do. If I have my own development fund, all of a sudden I might go, actually, you know what? I might do 20 house development because I don't have to hit all these pre-sale conditions. All of a sudden I sink a whole lot of money into the development without actually making any sales. Let's say James signs up for it. 2 years later, we still haven't made the sales required to complete the development. So I don't know, maybe they redo it, spin it into another development. Maybe they sink the whole development. Maybe the company goes under because they've done this too many times and they don't have sufficient cash flow to cover their debts.
Yeah. My big problem with developer funds is when people don't understand the risk associated. So there are no free lunches. If the bank's offering 5%, a developer's offering you 10+%.
Yep.
There was the one we did a podcast episode a while ago that was offering, was it 28 or 38%?
38.
Yeah. There is risk attached with these things. And if you are signing up for something, don't even get me started about the term wholesale investor.
What?
But if you are signing up for these things, you need to understand that more return means more risk. The GFC, all of these funds fell over there, and there's a certain type of person that is, this is not a bad thing, but there's a certain type of person that's attracted to being a developer.
Yeah.
And 1 and 2 developers will fall over a decade, right? So it can work out fine. It can be part of your diversified portfolio. But when I see, at an event of developer funds and they're all grey-haired people who are upset when interest rates were 2% with a bank and they've gone looking for returns, it does worry me.
Yeah, I just think also sometimes with these, the return that they are advertising does not correlate to the underlying risk of the investment. And I think these should be priced probably a bit higher than 10%.
And we do know funds, developer funds, that are going to fall over. They just haven't been able to, they just haven't been announced yet. And some of these funds, like the capital's already been locked up. People can't get money out. So just buyer beware.
Yeah, 100%.
So the action for today is
Buy
gold, crypto, developer funds, great investments. The action for today is if you're interested in these areas, just make sure you're aware and make sure you understand the risks.
Yep.
And if it's not your game, stay in the diversified games where we know the long-term returns.
Yep.
Give us a sub, give us a review, a like, and we'll catch you tomorrow.
Cheers.